Hello friends, this is Raj Sastry from Raj Option Trading. Today is July 17, 2022. Hope you're all doing well. In today's segment, we'll take a quick look at the market and look at top stocks in Nasdaq 100. So with that, let's get started with one of my favorite stock research platform, StockRover. Look, as you go into StockRover, you could click on the dashboard here. It will bring up a nice dashboard. I love their simplicity here. Look, as you go through the dashboard, you can see how the market is doing. Right now, you can see here, we got a Dow Jones Industrial Average going higher nicely on Friday. S&P 500 up nicely, as you can see here, and Nasdaq also went higher. All the major markets went higher, and then you can look at little more detail to see what went higher on last Friday. Look, we got all these big cap names partying here. We got Amazon.com up nicely, and AMD up nicely, as you can see here. Google and Apple all up nicely. Look, some of these semiconductor names like AMD, it's been trading very volatile of late. You could make a lot of money with trading AMD. It's trading very widely, as you can see here. And you could also look at what are the gainers. Look, we got a similar story here. Netflix finally went higher. Looks like they got an agreement with Microsoft to help with the streaming. I think it's a good partnership between Netflix and Microsoft. And we got a few more stocks which are doing very well, including beaten down DocuSign, which is jumping higher, as you can see here. And you could also look at the percentage losers, and look, you got losers here. We got Kraft Heinz and few other names, as you can see here, big losers. So it will give a good idea on what's going on here. And normally, I'm not really happy with just one day. I like to see what's 5-day, 10-day. You could just click here, look at 5-day, look at 10-day, and see what's going on here. We could even go year to date. Look what's going on year to date here. We got our technology sector. Year to date technology sector is down big time, down 25%, as you can see here. On the contrary, we got energy up 25% year to date. So you get a good idea what's going on. And also I like their small range bar here. Tells you on a 52-week range where are we in each sector. And it could go beyond. Many platforms just stop at 1 year, but StockRover, they even go higher to say 1 year, 2 year, 5 year. If you go to the scanner, you could also look at 10 years. So it gives a good idea. The reason I like this view here is, look, in the 10-year view perspective, broader view, look, Nasdaq handily, technology handily beat other sectors. That's why you could you should look this from a long-term opportunity perspective. Technology beaten down big time is always a good long-term play here. And also look here, we got consumer cyclical doing very well in the long term, and we got a few other areas like look, healthcare also did pretty well in the long run. So you could take a look at the long term, what the market is doing, and short term, look, buy those beaten down stocks and go from there. Look, energy, although it's partying right now, look, on a long term view perspective, it's just done 29% compared to other sectors which have done much better. All right, now what we'll do in today's segment, we will look at Nasdaq 100 stocks and see what we can buy. So look, I would go into the table view here in StockRover, and we got a table view, and in the table view, you could create a lot of custom views. That's one of the reasons I love this platform here. They give you a lot of the views, as you can see here. We got returns versus S&P 500 and financial health and so on and so forth. So you could even click on here and look at your favorite area. For example, you want to look at S&P 100. You could look at S&P 100 and see how it's doing against S&P 500 as an example, and see what stocks you want to buy. But in today's segment, we are going to look at Nasdaq 100 names here from a historic and future perspective. to understand what we should buy going forward, what I would do is I would go here to Nasdaq 100, and you could just do a quick filter. Look, we got Nasdaq 100 names, and also I sorted by market capitalization. You could easily sort by clicking on here, ascending or descending. I sorted by descending order of market capitalization. Look, we got top dog here, none other than Apple. If you just hover on this, you get a quick chart here. I love to look at the quick chart to see what's going on. And look, Apple is a big dog, $2.4 trillion market cap, as you can see here, and they got a PE ratio of 24, which is pretty low, as many of you know here. And one thing I always see here, in many platforms you don't get to see a trend pretty easily, but with StockRover, what I've done is I've added some custom metrics. I got sales 1 year change. This compares the sales last 4 quarters versus sales previous 4 quarters. Look, in Apple, sales in 1 year change perspective, last 4 quarters versus previous 4 quarters is 11.2, but look, before that it was 28.6, and even before that it's 9.9. You can, by looking at this, you can see here Apple is having some top line challenge right now with all these macroeconomic issues. Their sales growth is slightly lower compared to sales growth last year. That's what you could see here. This is mainly given all the pandemic. There's a lot of demand for these Apple's, iPad, iPhone, Mac, so on and so forth. That's why you could see a little bit lower sales change. And then also you could look at the gross margin. Look, gross margin trailing 12 months is 43.3, and before that it was last year, it was last calendar year, that's the 2021, it's 43%, and 2020 it's 38.8%. I love this view. It's not about what's the gross margin now. You should always look at this in perspective. Look, by looking at this quickly, I can say Apple is growing its gross margin from 2020, 2021 to now. That's a good trend here. That's why I like Apple even up here. And then you have net margin, same story. We got current net margin, and we got net margin in 2021 and 2020. Look, from a trend perspective, net margin slightly came down in recent trailing 12 months, but it's a pretty good, it's pretty close, as you can see here. That's why Apple is able to keep the net margin also pretty stable. Then we got debt to equity. Look, we got debt to equity right now, and we got total debt to equity in 2021, and we got debt to equity in 2020. By looking at this, you can see here Apple is taking on a little bit more debt. Apple is getting very good rates, as many of you know here, low interest rate. That may be the reason they're taking on slightly higher debt, which is manageable for a company like Apple. So it's also great here. And then you got shares diluted. I love to look at how the shares dilution, stock dilution is going on here. By looking at Apple here, look, stock dilution here is really reducing. That's a good story here. Apple is not diluting the shares. It's really shrinking the dilution or reducing the dilution, which is also great. And then you got a couple more columns here. We got year to date return, and we got 1 year return and 5 year return. Look, Apple on a 5 year return basis handily beat all the S&P 500 very well. And then we got the projection for next year. Look, Apple from a projection for next year, nice 325%, nice projection. Next year EPS growth 6.4, next year sales growth 5.4, and gets a top-notch rating here 80. And I would also do one more thing here. This platform has a lot of capabilities. Just by hovering here, you could do lot of things here. Let me do one thing. Let me reduce the size of this slightly, so we could look at some of the details here. All right, so we got Apple here, and we could go all the way back here. Look, we got Apple, and we could look at few more names here. We got Microsoft and so on and so forth. And one more reason I love this platform is you could also write some easy rules or screeners, as we can call it. So look, I got a screener right here, and I got an ad hoc screener. I love to write some ad hoc screens. So right now what I'm doing is I'm writing a custom screener, custom rule here. I'm telling, hey, you know what, I want to look at only Nasdaq 100 stock here. That's why I said membership equal to Nasdaq 100. And I love to write free form conditions. Look, I got a free form condition right here. What I'm telling you is really give me the companies in Nasdaq 100, which we have membership equal to Nasdaq 100, and I'm telling, hey, you know what, give me the stocks where sales growth right now, in basically sales growth in current year and current 4 quarters and previous 4 quarters greater than sales growth in year -1, and year -1 sales growth is greater than year -2 sales growth. That tells you, show me the companies which are growing sales growth consistently and sales growth is increasing between current year -1 and year -2. So I could apply this right away to the current screener here, and I could go back to my table here, run in table, and looks like that's fine. I will save this, no big deal. And let's look at the table here and go from there. I could go back to the table view right here. And look, we got our historic and future view here. Look, in Nasdaq 100 right now, we got few companies which are still growing the top line. Look, we got Broadcom here, or AVGO, as it's basically Broadcom. Look, Broadcom. Look, we got sales growth here. We got sales growth 17.4%, and year -1 it's 14.9, year -2 5.4. That tells you Broadcom is able to grow despite of this macroeconomic conditions here. That's a good accolade for Broadcom here. And then we got few more names here. Look, Intuit is also growing the sales, top line sales, as you can see here. Nice top line sales growth here, 44% compared to 31.6 and 13.0. And you could look at a couple more companies growing their sales growth nicely. And I could also click on one of this view right here, all view here. And many times I love to do little more research. So by looking at Broadcom here, I could just click on Broadcom. I could look at little more detail. Look, I could bring up this small view here. I could make it bigger also, just by sliding this. Now I could do little more research on Broadcom here. Look, Broadcom, from a 1-year chart perspective, stock is trying to go higher, as you can see here. That's a good picture. And I could even look at 5-year chart of Broadcom. Look, stock has been doing pretty well here. Now it's trying to bounce back, and you could do little more research here and look at how is their score. And I love these views that StockRover provides, because look, I could look at the trend here. It's not about what stock is doing now, it's about the trend. Look, from a valuation perspective right now, 76 value score. That tells you valuation is pretty low here. And you could look at the trend here. It's the lowest from a valuation perspective if you compare all the way back to 7 years ago. And they could look at the growth score here. Nice growth score here. It gets a 87 in growth. That's a good one here. And you could look at the quality score. That tells you about the margin. It's expanding. That's great. Then you could look at sentiment. Folks love Broadcom here. Sentiment is super high. Folks are really bullish on Broadcom. And then you got Piotrowski F score. That tells you, are the books improving? Look, Broadcom books are improving. Then you got Altman Z score. Look, it's got a high Altman Z score, financially pretty stable. And then you could look at analyst estimates. Analysts are estimating strong buy for this company. That's a great news here. And then you could look at compare Broadcom to S&P 500 and the industry. Handily, look, from a sentiment perspective, it's doing very well. And also from a return perspective, it's doing very well in the shorter term. Longer term also, it's doing better than the industry and S&P 500. You get a good picture just by looking at this cursory view here. And if you want to get a little more details, you could click on statements, and as StockRover will summarize in a nutshell for you. Look, just by looking at this, you could see here how is the revenue. Look, revenue is slightly lower, as you can see here, in March compared to December, but generally it's trending better. And you could look at all these things in a nutshell here. Look, share dilution is reducing. Look, this is the latest one here, September 21. Looks like shares dilution is coming down. That's always great story. In a nutshell, you get a nice view here, and you could get a good understanding what's going on here. And for you who are who love to see the charts, you could look at the chart also here. I could just click on here and bring up this nice looking chart. Look, we got chart of let's bring AVGO here, or Broadcom. All right, so so it should be refreshing here, but looks like there's something going on here. You could just type in here AVGO and go from there. All right, let's click on this AVGO here. There we go. All right, so we'll bring up AVGO here. Look, we got AVGO or Broadcom here. Look, we got a nice chart here. For the technical folks, you love to look at technicals. You could just add maybe on balance volume. That's one thing I always love to look at. Look, from an on balance volume perspective, look, it's going higher, as you can see here. That tells you stock is trying to go higher. So this is how you could just do a research on any stock easily with the StockRover. All right, now I could bring this collapse this, as you can see here. Now we got this view here. This view, as you can see here, it's the companies which are growing their top line despite of macroeconomic situations. We got some great names here. Look, we got Synopsys, one of my favorite stock. It's growing their revenue, and we got few more like Paychex, which is one of my favorite. Marvell, 5G play here, same story. And I could also bring up these guys here, so you could look at the chart also here. You got Marriott, MAR, and so on and so forth. It tells you these companies are growing their top line growth despite of macroeconomic challenges. Look, we got Okta finally trying to go higher, as you can see here. All right, now let's do one thing. You might want to see, hey, tell me which companies are growing their gross margin, or more importantly net margin. So we could go here to my ad hoc screener, and you could write a rule here and go from there. All right, so now I want to write a rule on the net margin. I could just sweep this and clean this out, delete all these things, and I would say net margin. Look, we got net margin right here. I could say net margin now, and I could just copy this very easily, and I could say net margin now is greater than net margin calendar year -1. That's basically net margin back in 2021. I could do an and here, and I could do same thing here. I could just say here, and I want to make sure net margin year 1 is greater than net margin year 2. So I could just do this here, and I could say year 1 is greater than net margin year 2. Now I could see here, in this challenging macroeconomic situation, what companies are growing their net margin in Nasdaq 100, because look, we gave here error occurred. Let's fix this up. I don't need to and at the end here. There we go. There you go. Now we are looking at in Nasdaq 100. Tell me the companies which are growing their net margin right now. I could go back to my table view here, and let's save this. And look, we are applying this net margin condition to these companies here, Nasdaq 100 companies. And we could go back to our screener here, our view, which I just created, which is the historic and future. Look, we got these companies here. We got Tesla at the top here. Look, Tesla is growing its net margin. Look, we got net margin 13.5, and we got year -1 10.3, year -2 2.3. Looks like Tesla is able to grow its net margin despite of macroeconomic situation. And same story, we got Costco here, it's also growing its net margin nicely. And all these companies here, look, we got a Broadcom here again, which is our AVGO. It's able to grow its sales as well as the net margin. That's a great story here. I love company doing that. Look, we got Cisco, it's an old dog trying to increase its net margin. As you can see here, that's the margin expansion. That's also a great story. We got few more companies, as you can see here. And you might wonder, what, you showed me how to do net margin and net margin expansion, and you also showed me how to do sales expansion. Can we combine both? Of course you can. You could go back to the screener here. You could go to this free-form equation, and I could say one more and here, and now I will say I want net margin expansion. I also want sales growth. I could just say sales here, and let's say sales 1 year change. It's comparing sales over last 4 quarters versus 4 quarters that precedes it. So let's take that one here, and let's say greater than, and I want to copy this very easily. Look, not a big deal here, and I want to say I want this to be greater than year 1. That's a calendar year 1. I want the sales now, sales change now, to be greater than sales change a calendar year before. And I would copy this all the way here. I would do same thing here. I want calendar year 1 to be greater than calendar year 2. I would say Y1 and Y2, and I would put an and here. Look, now we are getting stocks where net margin is expanding and top line sales is expanding. I could just update here, and I could save this one here, and I would go back to my go back to my table. All right, let's go back to the table, and look, we got our stocks here, Nasdaq 100 stocks, and look, we got few stocks which are growing their top line growth, and they're also growing their net margin. You might wonder, hey, this is great. Why limit to just Nasdaq 100? Can you do it for S&P 500? Of course we can. We can go back here to our screener, and we could run the same thing. Instead of membership S&P Nasdaq 100 here, I could change this, and I could say S&P 500 membership, and now look what happens. We could just get what we're looking for here. I would go back to my table view. Look, in S&P 500, despite of macroeconomic challenges, we got a list of stocks here. Look, we got a list of stocks which are doing well in the entire S&P 500. We combed through here. We got a short list of stocks which are doing well despite of macroeconomic situation here. Top of the list, we got AVGO or Broadcom here, which is Broadcom. We got Oxy, which is a energy name here, Marriott, and Schlumberger, again energy name, and so on and so forth. This is how you could quickly write the condition and go from there. Now you might wonder, hey, this looks great. Can we add a couple more conditions? Obviously you can. Let's go back here and let's add a few more conditions. And I would say, hey, you know what, let's make sure these companies are reducing the debt. So I could just add a few conditions here. I could say right here, and look, I love companies reducing their debt load here. I could say here debt to equity. So we got here total debt to equity ratio, and look, we're copying it right here. We'll put it to next line here. I would say greater than. I want to make sure debt to equity is actually reducing. That's what we love to see. And I want to make sure debt to equity now is less than debt to equity year -1. I could do a and clause here. Do same thing, make sure it's not just one time, it's at least 2 years in a row. I could say Y1, and Y2. Now we got a trend here where we have got the debt going down. And why stop at this? I also love companies reducing their stock outstanding. So I would say diluted share here. Look, we got diluted shares, total number of shares outstanding in the company got in millions in the annual filing. So I would add this one here, which is now, that should be less. I want this to be less than last year's share dilution. So I want share dilution to go down. I could say Y1 here, and I would copy this again. And look, we got Y1. I would say year 1. I want that to be lower than year 2. Now you're looking at S&P 500 stocks which are expanding their net margin in 3 years in a row, and they're expanding their sales 3 years in a row. They're reducing their debt load 3 years in a row again, and they're also reducing their stock dilution 3 years in a row. This is what I love to see here. I would just update, and I would look what's going on here. We need an AND clause here. That's it. I think that should do it. I would update right now, and I would save this one here and go back to my table. And let's go back to my table view here. Look, there is no stock found here because we have so stringent condition here. That's why it's no stock found. Let's do one thing. Why to restrict ourselves to S&P 500? We would cast a broader net here. I would say instead of membership, I would remove this membership here. I would say show me all major listings here. Now we're getting some list here. Let's save this one here. More major US stocks here. Let's see what companies are growing their margin and reducing their share count, and so on and so forth. Look, we got few companies here. I could just go to this view here, and if you want to see those companies, I could just bring up my chart view here. Look, some of these companies like E here, which is let's see, let's reset this guy here. We got E. All right, NE looks like this stock is not doing great, as you can see here. I could also bring up my insight here and see what's going on. Look, this company here, let's look at the summary. Look, I would not, even though chart looks like they're doing very well from a revenue perspective. Nice trend, I like it, and cash is also pretty not too bad. But look, performance perspective, it's not doing great. You could go to summary here and look at their 5-year performance. It's now we got Broadcom here. I want to look at for this company here. Let's look at E, and let's see here. All right, so we got our company E. Look, from an E perspective, we got company E. We are looking at a 5-year. This is not very consistent. Looks like it took a big dive here, and we got a few more. As you see here, we got GIB, West, and so on and so forth. Look, Jabil has been doing pretty well. Looks like they're doing good job here. It's again a contract manufacturer, like many of you know here. Look, nice growth. I like that company here. And then got WNS here, and it's also doing a good job. Look, chart perspective, it's doing very well. It's stock is trying to improve, as you can see here. Then we got VRTV. It's also doing well in multiple metrics. This is how we could do a quick research and see what's going on, and pick the winning stock. So with that, thank you very much. Happy investing and trading. Please subscribe.